Hey everyone, welcome back to Corporate Decoder. Today we're looking at a company that is about to pull a pretty interesting financial move. It seems like they might be trying to buy back some of their own debt. Let's decode exactly what that implies. We are diving into a current report from HERC Holdings, Incorporated, filed on the 1st of December of next year, 2025. This is a big deal because it tells us about a significant financial event happening very soon for the company. The actual event we're focusing on is a notice of redemption issued on the 1st of December of 2025. This is essentially the company telling its lenders or bondholders, hey, we are planning to pay you back. HERC Holdings Incorporated, or HE as it trades on the New York Stock Exchange, is a company you might know if you are in the construction or equipment rental business. They operate primarily in North America and are one of the largest players in their field. Think of all those orange forklifts and booms you see on construction sites. Chances are many of them belong to HERC. Now, what are they redeeming? What exactly are they paying back? Well, it is a substantial amount of their outstanding debt, specifically $1.2 billion worth of 5.50% senior notes that were due to mature in 2027. So they're paying back these notes nearly 2 years earlier than originally planned. The price they're paying is pretty straightforward. It is 100% of the original loan amount plus any interest that had built up but hadn't been paid yet. The key here is they're paying exactly what they owe on the principal plus the earned interest, so no big premium being paid to get out of this debt early. But here is the really important part. This redemption is not a done deal yet. It is conditional. This means HERC Holdings is dependent on securing new financing. In simpler terms, they need to either take out a new loan or sell new bonds to get the money required to pay off the existing $1.2 billion in debt. If they can't get their hands on that cash through new financing, this redemption won't happen. This tells us they are likely looking to refinance their debt, possibly at a lower interest rate or with better terms. This is a strategic move. Companies often refinance debt when interest rates have fallen since they originally borrowed the money, or when they have a strong cash position and want to reduce their future interest payments. Paying off debt early can improve a company's balance sheet and make it look more financially healthy to investors. It reduces their overall debt burden and the amount they have to pay out in interest each year. However, there is always a flip side. The fact that this is conditional on new financing suggests that the market conditions for borrowing might not be as favorable as they once were, or that HERC's current financial health might be raising some red flags for lenders. They need to prove they can still access capital at reasonable terms, looking at HERC Holdings as a company. They've been navigating a challenging economic landscape. Equipment rental companies are sensitive to economic cycles. When construction slows down or businesses cut back on capital expenditures, demand for rentals can dip. However, HERC has been making efforts to streamline operations and focus on higher margin rentals. This debt redemption could be part of a larger strategy to optimize their capital structure and free up cash flow for investments or shareholder returns. We need to keep an eye on whether they successfully secure this new financing. If they do, it signals confidence in their future and their ability to manage their finances effectively. If they don't, it could indicate potential headwinds for the company, making it harder to borrow money and potentially impacting their operational flexibility. So, what does this all mean for HERC Holdings Inc? Well, on the surface, it is a positive step towards financial flexibility and potentially lower borrowing costs. It shows management is actively working to optimize the company's financial structure. The biggest risk, as we saw, is their ability to secure the necessary funds through new financing arrangements. If they falter there, the plan to pay off this debt early will be shelved. Overall, HERC Holdings appears to be making a calculated financial maneuver. It is a move that can pay off significantly if executed successfully, leading to a stronger financial footing. But as with any significant financial transaction, the devil is in the details. And the success hinges on their ability to secure that crucial new financing. Alright, that is our breakdown of HERC Holdings Incorporated's latest filing. What is your take on this conditional debt redemption and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.